What's up, guys? JC with Big Game Real Estate. Today we're going to talk about how to get your first investor with little or no money and do your first deal for some huge returns. All right, so first things first is we have to get the investor or the developer that's in your local area. This is the easiest way. So what you're going to do is you're going to reach out, you're going to find out who owns the retail, who owns the multifamily, who owns the industrial, who owns the office, and it helps to make a decision on your part which one of those you want to invest in. I'll try to go over that in another video, but find out who the major players are. Call them up, all right? Get a name and number at the company, call them up. Say, hey, listen, my name's JC. I'm here in Utah, and I'm an investor in commercial real estate or real estate. I want to meet with you. Or we can do a phone call. Find out what they're looking for. All right, hey, what I come across, you say, look, I come across a lot of deals. What is it that you guys specialize in? And they may say, well, we look at deals, 10, 20 units and above. We look at, only freestanding triple net retail buildings, et cetera, et cetera. And now you have turned and tell them what you're looking for. Tell them, hey, okay, great. I look for, whatever, value add opportunities. And I would pose that and say, look, great. That sounds awesome. You guys look for 40 units and above in my area. Cool. So now you have a lead. So now you can take that information back. But conversely, you can also say to them, hey, listen, if you guys look at 40 units and above, I'll look at deals below that. Okay, so 1 or 5 to 39 units, let's say, and anything you guys pass on, I'd be willing to use my team on that deal if I like it and bring you all in as a partner. So now you've taken a phone call where you're calling them to introduce yourself as an investor. You found out what it is they're looking for. So you can take that information. I'm going to tell you what to do with it and go look for it to get a deal. And now you've shared with them what you're looking for, what you do, okay? They may have something on their desk that day that is 20 units that they're not interested in. All right, so now you can take a look at that deal, and as you're making these phone calls, you're going to have different investors and different developers that you're calling that you can present it to. All right, so you've turned that into maybe a deal that day for you that they're not interested in, but you're going to make them a partner. That's how you're going to get them to cough up the information and obviously keep you abreast, because they're an established investor or developer. They have people sending them deals all the time. As soon as they see it's under 20, they're sending it to you, man. Obviously, you have to execute on the deal if you want to keep getting them. Now let's talk about their criteria, right? They told you 40 units and above. They told you industrial, 50,000 square feet and above. They told you retail, freestanding, whatever it is. You're now going to go into your market and you're going to start driving for dollars. You're going to look for what it is that they told you, okay? When you find it, when you find a couple of those sites, you're going to reach out to those owners, right? You're going to call them up. You're going to say, hey, Mr. Johnson, I'm a local investor, and I see you have, this. Like to know what your thoughts are in selling the piece, right? And they're going to let you know. So now you're going to have to say, okay, hey, have you ever thought about selling it? No, I don't want to sell it. Well, have you ever thought about it? What if they say no? Don't be afraid to say, if they're not interested and they haven't thought of a number. Obviously, if they thought of a number, fine. But if they're hardballing you, don't be afraid to say, hey, look, sometimes we overpay for properties, because we could be cash buyers. We could have a quick closing. Okay, you might get their ear now. Now you have to find out a couple of basic questions, right? We went over this in other videos. What debts are on the property? Who do you owe money to? Are there any liens? Who are your tenants, if there are tenants? How long of a lease term is left? What are they paying? And a general idea of the expenses, okay? You're going to get that information and you're going to put it together in a bit of a presentation, a little bit of a pro forma. This could be, back of the napkin at this point, to be a little more official. And you're going to bring it to the investors that you spoke to, all right? You're going to say, listen, I'm working on a deal. Okay, these are the parameters. Are you interested? Now, if you're dealing with a developer, they may just say, go look for, a 2-acre piece of property so they can so they can develop whatever it is they're looking for. If you're doing that, you should be asking the seller when you're talking to them, or the property owner, listen, if I were to bring you a deal, would you be open to what's called a subject to deal? That means, hey, we're going to go in there and we may want to get it approved for residential. We're going to need some time to do that. They may say, nope, I'm only interested in quick cash closings. Okay, fine. So now you have the situation that you're going to bring back to the investors or developers that you spoke with, and you're going to present it. Now, ideally, it's always great to control the property. Now, when I say control the property, it means you put it under contract and no one can take it from you before your due diligence is expired. But that is going to probably be a little bit difficult for you guys on the larger commercial properties your first time at the gate. So this is why I stress the fact that you have to establish a dialogue and a relationship with your investors and developers. Of course, once they have the address, they could look it up and they could go around you. But if you're bringing them deals and you have a relationship with them, you've started one, you've had a few phone calls with them, they're probably not going to do that. It's not in their best interest. Conversely, you don't want to tell the seller or the property owner that you're working with these guys, because they will call them up directly and you'll be out of a deal. So you want to protect yourself. Hey, look, my group is this. Who's your group? You know, it's me, JC, you know, and then you can work into that as time goes on. Now, what's going to happen next? There's a lot of folks that, you know, will say, hey, look, I want a percentage of the deal for essentially finding it, right? You know, it's a finder's fee. And that could that could be a fee or that could be a percentage of ownership. You could get into deals with no money, right? You can say, look, instead of, you know, I'm not going to ask the seller for a commission. I'm not going to ask you for a commission. I want, you know, 5%, 10% ownership for finding the deal. And you will find situations where that works. What I always suggest is, look, it's better to go to somebody and say, listen, obviously you guys are the majority partners here. I'm going to contribute up to $10, $25, $50,000 to closing costs and attorney fees of my own money. All right, I brought you the deal. In exchange for that, I'm looking for, you know, after everyone's paid back, a 10% partnership in the building, you know, in the property. And, you know, they'll say yes or no. And you can obviously say, look, you're welcome to use my team of guys, right? We know we have a team of guys, of professionals that we're working with. They're probably going to want to use theirs. But again, you're presenting the idea that although you might be new, you are professional. Have that money in a bank account of your LLC, right? Not your personal name. And you draw up the contracts. That's my suggestion. If you can't do it, you can't do it. You can get guys to allow you to be a partner for no money down. If they won't do it, try to get a fee out of them, and then on the next deal, use that money, obviously, to roll into your partnership. I always suggest going into a deal with some kind of money because it lets them know you have skin in the game, and it's also a cause to ask for a larger percentage. Now, there's some different things that we'll cover in later videos where the timing and the percentage of the payback, right? There's a different rate generally before everyone's paid back. So if the property brings in $100 and people haven't been paid back yet, there might be a different rate than once everyone's been paid back their initial investment. Usually that's called a bump, and it's a higher percentage because everyone has their money back, right? So again, guys, these are the tips and tricks on how to get your first investor. When you find the property, how do you find the property once you've identified, or how do you find the owner? Again, that goes back to our other videos. Use your tax record programs, use your commercial platforms we discussed, letters, knock on the door, knock on the tenant's door, okay, find out who owns this property, okay, and you go from there. And then once you give the name or the address and your investor group is interested, great. What's the next step? Set a meeting, okay? Set a meeting with the property owner and them, but make sure you have established what you're looking for in the deal. That you have to tell them, hey, I'm giving you 123 Main Street. See if they're interested first. Say, awesome, look, this is what I'd be looking for the deal. All right, so, but again, you want to make sure they're interested first. And that's really it, guys. That's the beautiful part. You can get into these things with no money down. It's better if you have some cash, you'll make a little bit more, and that is how you secure your first deal. But remember, you didn't make one phone call, right? You called several investors, several developers. So when you found out their criteria, now you have a ton of leads to go and work around with. So if it doesn't work for one guy and you bring it to the first company and they say, you know what, we're really not interested, great. You should have at least 2 or 3 other guys that you can bring that deal to, okay? I wouldn't give it to them all at once, show a little respect, start the relationship. But again, guys, if you make 10 phone calls and you got 10 investors or developers, you got 10 criterias, and you should have 10 groups that are feeding you deals as well. Because if that developer says, hey, I only build industrial or multifamily and I need 3 acres or more, your response is, awesome. Hey, I know you probably get a lot of submissions. If anything is less than 3 acres, I would like to take a look at it. Can't guarantee you I'll buy it, but if I do something with it, I'd be happy to bring you in as a percentage partner on my deal. They'll all say yes, guys, because it's all about making money, and it's all about doing deals. So good luck. We'll see you next time. Later.